Good morning, everyone. Today's market saw a significant downturn, driven by ongoing trade tensions and concerns about the potential impact on the economy. The S&P 500 fell by 2.24%, the Nasdaq dropped by 3.07%, and the Dow Jones Industrial Average declined by 1.73%. Interestingly, Bitcoin managed a slight gain of 0.33%. With markets closed tomorrow for Good Friday, let's dive into the key news driving investor sentiment. One of the key pieces of news today was from Taiwan Semiconductor Manufacturing (TSM). The company posted Q1 net income ahead of analyst expectations and maintained its growth outlook for 2025. This was a positive surprise, suggesting that TSM, a major player in the chip industry, might be able to weather potential trade war impacts. TSM's stock saw a pre-market jump on this news. TSM's strong results and positive outlook are a source of optimism in the semiconductor sector, which has been under pressure from trade tensions. However, the broader picture in the semiconductor sector remains complex. While there's progress in trade talks between the U.S. and Japan, the focus on Asia highlights the ongoing tensions. Nvidia and AMD both saw significant declines today due to new export licensing requirements aimed at curbing the sale of advanced AI chips to China. AMD also expects a substantial charge related to these restrictions. Despite TSM's positive news, the new export restrictions and their impact on major players like Nvidia and AMD continue to weigh on investor sentiment in the broader semiconductor industry. The declines in Nvidia and AMD are having a negative impact on the tech sector, particularly those involved in AI and high-performance computing. Adding to the market unease, U.S. Federal Reserve Chairman Jerome Powell acknowledged that trade tariffs could lead to higher inflation and slower growth, potentially requiring interest rates to stay higher for longer. He expressed concern about the potential tension between the Fed's dual mandate goals of price stability and maximizing employment. This has further reduced the probability of near-term interest rate cuts. Powell's comments have heightened concerns about stagflation, a combination of inflation and economic stagnation, and the possibility of tighter monetary policy for a longer period. The reduced probability of near-term rate cuts reflects growing concerns about inflation and the Fed's policy response. Looking ahead to earnings, Netflix is scheduled to release its Q1 results after the closing bell. While the company no longer reports subscriber numbers, investor focus will be on user engagement as a key indicator of customer satisfaction and loyalty. Investors will be closely watching user engagement metrics to gauge the company's performance in a competitive streaming landscape. Earlier, Truist Financial reported its Q1 results, with a fall in profit that broke its streak of beating consensus estimates. This weakness was attributed to the investment banking and trading units, impacted by market volatility. D.R. Horton, a major homebuilder, also released earnings before the market opened, reporting a double-digit percentage decline in both revenue and profit due to macroeconomic challenges and market competition. The earnings miss by Truist reflects the challenges faced by financial institutions in a volatile market environment. The significant decline in revenue and profit for D.R. Horton indicates the ongoing pressures in the housing market due to macroeconomic factors. In conclusion, market downturn reflects a combination of factors, including ongoing trade tensions, concerns about the impact of those tensions on the semiconductor industry, and the Federal Reserve's warnings about potential stagflation. While TSM provided a bright spot in the chip sector, the overall sentiment remains cautious. We'll be back on Monday, April 21st, with more market analysis. Have a safe and restful holiday weekend.